Day gang, how's everyone doing today? Let me know if you guys can hear my voice, see my screen, see my voice, hear my screen. Perfect. Welcome back to the Tier 1 Trading New York Live trading room session for you guys that are here for the first time as part of the Bridging the Gap workshop that we're doing. Welcome to the live room. What we're going to do here is we're going to scroll through the markets. We're going to look for some trading opportunities. However, I'm going to try to explain things a little bit slower than what we usually do, right? Typically, we have kind of a routine crowd here in the live room. They know how I trade. We're kind of all on the same page. We can blast through some opportunities, do some analysis, have some chit chat about various different subjects that are all over the place. Knowing myself, I will probably go down that rabbit hole because there is a lot to trading. It's not necessarily complicated, but there are a lot of different pieces that can be put together to find different trading opportunities around the market. But I'm going to try my best today to keep things as simple as possible because I know that many of you guys are at different levels in your trading. For you guys that took the training yesterday, we learned about candlesticks. So I want to make sure I focus a little bit on candlesticks and reading the strength of a candlestick and understanding the stories that it may tell, taking a little bit extra time to talk about support and resistance, right? But the biggest thing, and George put this in already, do not be shy. There is no such thing as a dumb question. There is such thing as a dumb question. If you ask me, Akil, I bought the euro already. I bought it without putting a stop loss on. It's going against me. What should I do? I'm going to say get out. But like stuff like that's a dumb question. Like where should I blindly buy? But I don't think you guys are going to do that. But if you have any questions about anything, right, let me know. I have no problem going over stuff multiple times. I have no problem re-explaining things. You can ask the guys that join me in the Q&A every week. I will sit there and explain it as many ways as possible until it makes sense. And we have a phenomenal group of traders in the room here that are Tier 1 members. They've been with us for a while. They understand the concepts. And honestly, right, we've been hyping them up. They're excited about teaching you guys because when you teach, it is a fantastic way to learn yourself. In fact, you retain the most information when you teach it to others. So please participate. And for you guys watching on YouTube, right, I'm doing my normal trade of the day live stream for the first trade we look at. You have no excuse. You should be over here in the actual live room, right? Why get one trade where you can get the whole session and more training for the next 2 weeks? So hop over to that Bridging the Gap trading workshop. Just get over to www.tier1trading.com, sign up, and it's free. Do it. It's free. So Grant says, is MetaTrader 5 a good platform to start on? Sure. Yep. I would tell you this. Any platform that you're comfortable with is a good platform. The thing about platforms is it's gonna be like cars in a sense, right? There are some that are better than others. There are some that are more expensive and overpriced. You want to find something that works, right? Find something that gets you from point A to point B. Find something that you can do whatever it is you need to do. So if you are going to be doing technical analysis, find something that allows you to perform technical analysis. As a newer trader starting off, free is better, right? Because until you get to the point where you're fully invested and you know that, hey, this is what I want to do, and you have maybe particular things that you want, go with something free and try it out. With that being said, as you learn more about yourself and if you experiment with different platforms, you're going to see that you may grow to love some more than others. One of the reasons that I chose the platforms I use is because the ease in which it allows me to do technical analysis. One of the reasons you see me use on NinjaTrader right here is because, this is one of the platforms that are specific tools like VS1 and Enigma, the stuff that you'll be getting, I think today or tomorrow, is coded for. But yeah, there's no such thing as a bad platform. I started with something called AccuCharts, right? I thought it was a weather app. And you can always change later. Yep. All these will be recorded and posted. So we're going to start with the first opportunity I want to take a look at today is going to be the dollar yen. And this is an interesting one. We're going to start on a daily and work our way down because from a fundamental perspective, we're kind of in a big battle right now between dollar and the yen. Now, first and foremost, we are technical traders, right? So everything that I do is going to be based off the technicals, but we do keep an eye on the fundamentals for a few reasons. One, we want to know when we may need to avoid the market. So for example, this is the first week of a new month. That means Friday is what? What's coming on Friday? Non-farm payrolls, right? Non-farm payrolls for me personally is an event that I have no interest in trading during. So knowing that avoid market day, yeah, there we go. So knowing that that news event is coming on Friday tells me that, hey, between this window and that window, I don't want to be in the market. So that's one of the benefits of understanding fundamental analysis. Another one is, as you become more skilled as a trader, you can kind of blend the two together. We call it hybrid trading, where, the technicals are your main reason for entry. But if those technicals align with a fundamental bias, you can sneak some bigger moves out of the market. And that's a pretty useful skill if you can do that a few times a year. So today we got some job openings coming out for the dollar at 10. We probably won't be here at 10, so we won't need to worry about that. But in general, the mood of the market right now is very interesting because there is a big battle between the dollar and the yen, right? Now, who can tell me why there's a big battle between these two particular currency pairs? What would you guys say? Why the dollar? Why the yen? What do these pairs have in common, despite them being quite different? What do they have in common? Yep. They are the safe haven pair. So when the world is burning, which we literally are burning right now, these are the safe haven pairs, meaning that these are the currency pairs that investors feel comfortable putting their money with when everything else is dangerous. And if you look around the world right now, it's a pretty dangerous place. Now, the interesting thing is that we've kind of shifted back from one to another, right? The dollar had gained strength as being the safe haven pair because we're going through this interest rate hiking cycle where the Bank of Japan said, hey, we're not doing anything. So just kind of economics 101. You got US hiking rates, yen not hiking rates, right? It's going to give you dollar strength. But now things have slightly changed, right? We've taken a more dovish approach here in the US where we're going to slow down our rate hiking cycle. We've got some other stuff with Nancy Pelosi visiting Taiwan and some beef there. But we also have the fact that we're trying to figure out right now, are we in a recession? Are we headed towards a recession? Is this like, right? It's a weird situation because we've got different signs of being in a recession or close to a recession, but we're not struggling with jobs. So it's I was doing an interview with another trader yesterday. We had the same conversation where it's really kind of weird because it's like we're producing more jobs and the unemployment rate is not, but no one wants to get jobs, but we are so it's an interesting time. And what that means is that there's going to be more attention paid to the fundamental data that is released between now and September. Particularly jobs. And again, we have a jobs report today. We have a jobs report Friday. Those are going to be fundamental releases that the market pays a lot of attention to. And the market is going to use those numbers, right, along with other reports as well, is going to use those numbers to base its opinion in the market about what's happening going forward. I have no idea what's happening going forward. If you ask me, I am sitting here for the ride. I just observe. But it's an interesting battle because the yen, the power has kind of shifted with the yen. And if we look at the chart, we see a visual representation of this, right? I don't think we've gone over this in the Bridging the Gap training yet, but the market moves in basically two different ways. It trends and it consolidates. So it is directional or it goes sideways. One of the easiest ways to identify a trend, right? Write this down. One of the easiest ways to identify a trend is use common sense. Does that make sense? Use common sense. Are we bullish or bearish? Are we going up or down right now on this chart? Bigger picture, not the recent red move. Even that's common sense, right? What would you guys say? A little trick I like to teach is this, right? If the market's going from the bottom left to the top right, we're in a bull trend. If we're going from the top left to the bottom right, we're in a bear trend. If we're going from in the middle, kind of left to right, We're in consolidation. If we're going from right to left, I would just getting a new charting package because something is up there. But seriously, a lot of people, we do teach rules on how to identify trends, 3-point move, right? Initial starting point, new initial structure high, outside return, new structure high. We do teach rules for that. But at the end of the day, we also want to use common sense. And I can give you a good example. My son, this is exciting times, Charles and Darren. So my son was up early this morning because he gets up. He's like me. He's got the Stokes gene. Like I'm up. I was up 5 this morning. He's up like 6. He's chilling with me, and I'm looking at charts to do my pre-market analysis. And I'm doing this analysis, and he's asking, he's looking at red and green candles. He's like, Dad, is this how you make money? And very prideful, I said, yes, son. This is how I make money. Unfortunately, the only trade I have open right now is losing money, so I couldn't show him an example of a winning trade. I was like, well, I'm down right now, but it may return. But I started quizzing him. I said, I make money, if I buy and the market goes up, then, I can make money. If I sell and the market goes down, I can lose money and vice versa. And I gave him kind of a test. I looked at this very chart and I said, this chart right here, should we buy or sell? And he actually placed his first trade this morning, guys. How about that? Placed his first trade this morning. Now, it was against my analysis. I would have preferred him to get short, but bigger picture, I think he's on the right side of things. Placed his first trade this morning. He said he used common sense, right? He knows nothing. He hasn't taken the course yet. He said, you know what? It looks like it's going up, Dad. I said, yeah, good, smart dude. Looks like it's going up, so I want to buy. I said, okay, let's place a buy. And then I had to place it twice because I placed it once with my actual account, and I said, wait a minute, let's reduce this position size. But he's in his first trade right now. So next is getting him a trading account, which is pretty cool. But the point is, he used common sense. He didn't overcomplicate it. I think that's one of the things that adults tend to do, especially when we have more information, is we make things more complicated than it needs to be. And then we get paralysis analysis, right? Have you guys ever heard that? Paralysis analysis or paralysis by analysis? It's when you analyze the market so much, and I guess in real life too, when you analyze a situation so much that you kind of freeze, right? Because you're thinking about, like I used to get it a lot in school. I would take tests and it'd be like multiple choice tests. And then I had this teacher where you'd be like, it could be one answer, or it could be all 4 answers. And I'm sitting there like it was clearly all 4 answers. And then I'm like, wait a minute, they would never make it all 4. One's got to be a trick. And I would analyze it to the fact that I would get the wrong answer because I second guess myself. And we are going to teach you rules, right? We're going to teach you rules. That's going to simplify the process, but don't lose sense of common sense, right? I think trading is an art and a science. There is a scientific component to it, but a lot of it is what your eyes will naturally see. And you see something like this. This is a clear bullish trend, longer term. If only my parents taught me this. Yeah. Hey, well, look, you could be the chain breaker. You could be the chain breaker. We talk about this. My pastor at church he comes from a family of alcoholics, and he decided that he's going to be the chain breaker because he was following his path. He was afraid that his sons would follow his path as well. He said, I'm going to break it. That could be you. You could be the one to learn about the financial markets. Teach it to sons, daughters, cousins, nieces, friends, whoever. And then from that moment on, they continue to pass it forward. That's my goal. So anyway, bigger picture here, bullish trend, dollar yen. We've come to an interesting point though, right? So if you saw the Trading Edge video I did this past week, I thought this was going to be, and it still could be. I thought this was going to be our natural stopping point, right? We talked about the ebbs and the flows of the market, right? The market ebbs and flows. So even though it's in an uptrend, it has these highs, these extensions, we call them. It has these pullbacks or retracements, right? It's got these extensions right here. We got these pullbacks and retracements, right? This is how the market operates, right? And what's interesting is that, my mentor always told me, look left, structure leaves clues, because structure levels, swing points, right? Balance points, these are key levels in the market. These are levels that the market pays attention to. And you'll notice that in many circumstances, right, current levels of structure were actually past levels of structure. So you can see that, and they don't always hit at the same point, right? There's zones in the market, but you can see this level up here, which is called a previous level of structure resistance. Once it's broken, that zone becomes support, right? And we break that level and we come back. Well, look here. Where did we come to, right? This previous level of structure right here. Same thing. We broke this current level of structure right here. Where do we return to? This level of structure right there, right? Look left, structure leaves clues. So I anticipated that the dollar yen would run into some trouble at this level around the 132 even handle, this psychological number. And we still can. This is on the daily. We have a full day for this to kind of figure itself out. But we want to start thinking, hey, if this level of structure is broken, if it doesn't hold, where are we likely to go to next? And what you'll notice as you spend more time with us here, Jason and myself, is that our trading styles are pretty simple, right? They're so simple that this is no lie. They're so simple that some of you are going to get offended and leave because you want the complicated. You don't care about making money. You just want something that's complicated that will feed your ego. We get it all the time, where it's like, yeah, that strategy was good, Akil, but it was too simple. I need something with more indicators. Like, why? And they never have an answer. I'm not really about complicated stuff. I'm about making consistent profits, to be honest with you, but to each his own. But a good way to look at the market is to think about structure, these structure levels acting like magnets, right? So magnets do two things, right? Depending on what side you have it flipped to, they can pull other magnets towards them, or they can push other magnets away from them, right? Would you guys agree? Go back to your childhood days where, you know, we should be learning in the classroom and you're just playing with the magnets and like, ooh, look, invisible man, right? At least that's what I was doing. Probably should have been paying attention in school more, but you know, I would do my own type of learning. Called a Montessori. There we go. But yeah, that's how it works. So the spinal cord, the backbone of my analysis, is essentially identifying key levels of structure and predicting what levels of structure we're likely to go to next, right? So the levels like these are called decision points, where we're either going to do two things. We're going to make a decision, or the market's going to make a decision for us. We're either going to hold this level and continuate up. That's a word I made up, continuate. Or we're going to violate this level. And if we violate this level, where would you say we're likely to continue next, or continue to next? What would you say? Where would you say? Don't be shy. I'm going to ask a lot of questions. That's my teaching style. I'm going to involve you. Yeah, the previous level of support, right? We got this nice level right here that was hit a few times, right? Probably a good magnetic level that's going to pull price towards it, right? So ultimately, and this is not an easy path, right? It's not a straight path. Sometimes there will be very easy paths in the market, right? Dollar Canada is one of them where there's just nothing in the way. We do have to fight through this consolidation level, right? So it's not an easy one, but this would be the predictive level, right? 128s and lower. I would say at least 128s, right? The highs at this kind of consolidated level. So that's called creating our bias. Something else you're going to learn throughout the week is called the IPDE process. I love it. Philip on YouTube says, the simpler the strategy, the easier it is to follow. Yeah, you would think, Phil. Some people know. And we all know those people. Some people, they love to complicate stuff. So we have this 4-step processing, and we'll teach you about this later in the week. So this will kind of be a preview, but it's called IPDE: identify, predict, decide, execute. And what it allows us to do is really set up our bias for the market. So we want to identify what price is doing, that is reading a chart, identifying trend, key structure levels, stuff like that. Based on what we identify, we want to predict where do we think price is likely to go next? How do we think price is likely to go there? So what direction do we think price is likely to go in? Then we want to decide, and that's based off our trading plan. Okay, do I have the tools in my toolkit to really attack this? Meaning, how can I get involved, right? What are my techniques for entering? And then lastly is entering, which seems like the easiest part, right? Click the button, but for a lot of traders, when it comes time to click the button, this imaginary force field starts to form around their mouse, and like it stops them from doing it. So things get weird sometimes. So we're currently looking at price trading below this level. So again, we'll need to wait for the daily close for confirmation on this time frame, but we can anticipate a continued move lower. This kind of goes with our fundamental analysis as well, talking about the dollar being more dovish, the yen being more hawkish right now. So let's go down to a 4-hour chart, a 240 chart. Right, this is my natural progression. And what do we see down here at the bottom of our screen, right? Right, we can see the VS1 level, by the way, that was just broken. This green box, I haven't set to the 4-hour. That's why I took them off the daily. But you see our key level of structure right here, our VS1 level. Great visual representation of the structure swap, right? Resistance in red, support in green. I need to find a color that starts with S. So resistance red, support green, support sandy. I don't know. Anyway, we violate that level. And now, what would you guys say price is doing? Just looking at our candles, right? You guys learned about candles today. What are we doing looking at these current candles? James says, nice bullish bear candle there. Looking at this first one right here, little pin bar action, right? Bullish bear candle, meaning it's technically a bear candle, but he's looking at it more of a bullish type of candle because of the wick to the downside, right? Hopefully you guys remember that from yesterday's training. We don't want to judge on the color of the candle. We want to judge on what it looks like. That's going to give us a lot more information, just versus just saying red is sell, green is buy, right? So we got a few rejection candles, right? We got a few rejection candles, right? We have this higher momentum bearish candle, excuse me, that we see ends with a longer wick to the downside. So we know there's some buying pressure down here. We followed it up with the James candle, right? Where we have a candle that closes middle upper third, long wick to the downside, showing us more signs of buying pressure, right? So there is some bull activity down here. We then, what is this green candle right here? What does this tell us, right? Wick to the upside, wick to the downside, body in the middle. What information does that give us about this candle? Indecision. So a battle. And then we currently have an inside bar, right? This candle is still going. We've got a few more hours, an hour and 6 minutes before it closes. But currently this is an inside bar, meaning it's a bar that completes completely within the previous bar. Essentially a fancy way of saying on a lower time frame, that's going to be consolidation. So, yep, indecision. So we are right now in a point of indecision, right? The market is essentially going sideways, right? Again, common sense. We look at the price action going like here, clear downward slope. And now we're kind of going sideways. We're bouncing here, we're bouncing here, we're bouncing here, we're bouncing here. Now, a few things. Oh, yeah, sorry. Inside bar. That's it. If you're new, don't just ignore that. It's something we do and just lost a bet, whatever. Just, it's not weird. It's normal. You just haven't been here. You're weird. Okay. How about that? Darren edited out the recording. So right now we have a period of consolidation. Don't you laugh, Charles. Don't you laugh, Charles. You've got kids. You make all types of weird sounds for your kids. Live room members are my kids, so I make weird sounds for them. We need that as a sound effect. What we'll do is I'll develop a course all around inside bars, and I'll travel the world selling it. And we'll just do live presentations, and that'll be my thing. I'll just stand on stage and yell inside bar in that voice, and that'll be the kicker. Oh man, so yes, it'll go viral. Oh man, why do I always go viral for the bad things? So anyway, We've got a little potential. We could have a potential reversal. We got a little sideways action forming right now. So this is going to be an interesting level in the market because we have two things that can happen. One, right, if you look at us going sideways, let's assume we're going to go sideways for a little bit. One, we're going to have a level of resistance that's created up here. We're going to have a level of support that's created down here. Now, we do have a bias from the higher time frame. We have a bearish bias because of the trading below structure. But what I like to do in these situations, right, is, or what you can do in a situation, I like having a directional bias, but you can bracket this level and use something called the if-then syntax, where if price action breaks and closes above the highs, then you can do what? Then you can look for what, I should say. You could look for a little bit of relief, a move higher, right? We got some nice candles right here, which represent where we can go if we go higher. Not a lot of room, but maybe for a day trader down on a lower time frame. If we break this level and violate this level to the downside, well, remember, we're shooting for 128. That's the lower level of structure at minimum that we looked at on the higher time frame. This would also be something called, if we continue sideways movement, this would also be something called a low and tight flag, right? We're going to talk about flag patterns in tomorrow's training. But this is basically a breakout pattern where, based on our higher time frame analysis, we would expect a breakout to the downside. So what we're doing here as traders is this, right? Is there a trade right now? Well, there could be. Is there a trade for us right now? Are we saying, because this is the question I always get. So Akil, what should I buy it? Right? We always got that one person, finger on the trigger. So should I buy it or sell it right now? And this is the difference between struggling traders and successful traders, right? Professional traders, right? We do everything in advance. So we are predictive in our analysis. We are reactive in our execution. So right now, we do nothing. We are just rehearsing our game plan. If price does this, then I'll do that. If price does this, then I'll do that. And then we're waiting for price to do it. Does that make sense, guys? It's probably a little bit different than a lot of the gunslingers you see out there who are just pew, 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 shooting everywhere, right? So let's take this bearish example. This is the one I'm interested in. So I already have my target level in mind, 128s. So I already know where I want price action to go to. I personally know how I can get involved. So I'll walk you through what I will be looking for, unless we form a high and tight flag. But as of right now, if we get a break and close below this level, it will allow me to identify a break and close, a continuation in the trend, or I guess identify a break and close. That allows me to predict a continuation in this trend, right, to the downside. My personal way of getting involved is a pullback trade, right? There are many ways you can get involved. You can be a breakout trader. There's, to each his own. You want to fit that to your personality. We won't get into all that right now. But I'm a breakout trader or a pullback trader. So I need price to violate that level. I need price to pull back, give us a retracement. And then this is the move that I'd be looking to get involved in. So already before this actually happens, I know exactly what needs to occur for me to take the trade. Isn't that kind of cool? How many of you guys have traded before? Like actually executed a live trade? Give me a yes. How many times have you felt super nervous before executing that live trade? Very, very, very. How many of you guys have ever given a speech or a presentation? It could be in school. It can be for work. It could be at a family event. Anyone? How many of you guys have felt super nervous during a speech or a presentation? The two are very similar. Preparation brings confidence. Confidence brings comfort. Comfort decreases mistakes. The more you know about something, right? The more work you've done, research you've done, experience you have, the more confidence you feel, right? I see Duncan in here. Duncan's probably a great example, right? Think about Duncan on day one, first time at your job and you're doing a presentation, or your first presentation ever. You're probably pooping yourself up there. You fast forward many years later, you've done it before, you know exactly what you're talking about. A lot easier. Am I right, guys? First time giving a presentation, probably pooping yourself, scared. You fast forward 10 years later, you're a master and expert at whatever you're doing. You're getting up there, you're probably not even rehearsing, you're just winging it, right? You're just like, yeah, you know. Anyway, let me tell you about these numbers, right? Because you've prepared. Trading is the same way. The reason that most traders fail is because of self-sabotage. The reason that traders self-sabotage is because they give into emotional triggers such as fear and greed. Those are the two big ones. The reasons that traders are fearful and or greedy, and mainly fearful, is because of lack of confidence. The reason that they lack confidence is because they never did the things that were necessary to build that confidence. So it all starts there. When you've taken the right steps, when you've done the work, when you've gained the experience, when you, and I don't mean this in a way to taunt the markets, but when you know the outcome before you take the trade, and I don't mean the outcome of any given trade, but I mean the long-term outcome of your strategy. Like, so I know at the end of the year, the range of what I'll be return on investment wise. I have no idea how I'll get there. But I can pretty confidently tell you the range that I will be on in as far as what my return on investment will be. Now, again, I can make it all in the first month and just lose the rest of the year. I've had years where I've lost the first 2 months, went into massive drawdowns and won the rest of the year. I've had years where I've had good starts and bad finishes, right? All over the place. I don't know how I get there, but I know I get there because that's what my numbers tell me. And that's what my history has told me. But when you know that type of stuff, you're confident. So as professional traders, what we want to do is we want to be confident. We want to be prepared. And I want you to run through two scenarios in your head right now, right? So think about you opening up this chart and price action has given us a red candle. It's green, but I know, just envision it being red. A red candle that has broken and closed below this level, and boom, what are you doing? You're probably panicking, right? You're like, oh, okay, we broke, we closed, we're trading, you know, and the whole time this thing is going like this, right? You're like, sell, right? That's the unprepared trader, a panic move. Now they're in at a trade maybe they weren't supposed to be in, at a level they weren't supposed to be in, vice versa. The professional trader, right? Again, we already know if price action breaks and closes below structure, then I look for a pullback. If I get pullback, then I need lower low, lower close candle. If I get lower low, lower close candle, then I enter next bar market. If I enter next bar market, then stop goes 1 ATR above the highs, targets go at 128.03. Did that seem confident to you? Did that seem more prepared than the first example? Do you know why? Because I've done it before. It's my trading style. I've taken millions of trades like that, and I've rehearsed it before it ever happens. Now I'm not caught off guard by a panic. When that red candle comes, I'm not sitting here freaking out, selling it. I'm like, okay, wait, no. If we break and close below, okay, we got that. Then wait for a pullback. Okay, don't panic, get a kill. Wait for your pullback, right? You know exactly what you need. And that's going to help you eliminate those psychological mistakes. And eliminating those psychological mistakes is going to help save you money. And when you save money, you can grow your account faster and then achieve all the dreams and all the stuff you want to buy with all your newfound wealth. All right. So that's what I'm looking for here on dollar yen, right? A little bit of consolidation. I do expect a weird type of week. It is a non-farmed week. Traditionally, we tend to consolidate before Friday. We've been seeing this a lot because we had interest rates last week. But I would expect more what I call stop and go traffic. But this is an interesting one to look at. You can see on a lower time frame not a better look, but another look at our consolidation. Now we're just waiting for the market to finish on. It looks like it's taking a breather. I am looking for a continuation to the downside, and we'll see what happens. Any questions on the dollar yen before we move on to our next pair? If you guys watching on YouTube, I'm going to kick you out. Thank you for joining. Hit that like button on your way out. Hey, remember, this is a free week. You shouldn't be watching here on YouTube. You should be in the live room with us. That way you can stay with us the entire time. That way you can get all the free training instead of just watching here on YouTube. So I don't want to sound mean, but you're missing out. I'm trying to help you out. We're trying to help you out. So hopefully I'll see you in the live room tomorrow. All right. Take care, YouTubers. We'll get this done.